Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial statements of big companies and try to figure out if they're playing a smart game or just playing dress up. Today, we're unboxing a fascinating report from Heritage Commerce Corp. And let me tell you, it looks like they're cooking up something big in the financial world. Something that could change the game for them. Make sure you are subscribed for more breaking corporate news and join our Discord community where we discuss these findings live. So, what is this report all about? It's an 8K filing, which is basically a company's way of telling the public about big, important stuff that is happening between their regular financial reports. Think of it as a press release with legal muscle. And the big news here, Heritage Commerce Corp is merging with CVB Financial Corp. This document lays out the entire game plan for this merger. Basically, after the 17th of December 2025, Heritage Commerce Corp will officially become part of CVB Financial Corp. The two companies, Heritage Commerce Corp and CVB Financial Corp, are planning to join forces. It is a merger, and CVB Financial Corp will be the one remaining company after the dust settles. And it is not just at the corporate level. Heritage Bank of Commerce, which is owned by Heritage Commerce Corp, will also merge with Citizens Business Bank, which is owned by CVB Financial Corp. So, on one hand, you have Heritage, and on the other, you have CVB Financial. They're tying the knot at both the parent company level and the banking subsidiary level. The report is dated the 23rd of December 2025, so this is very current. This filing is coming from Heritage Commerce Corp, a California-based company. They've been around as a public company, as indicated by their commission file number. Their stock, the common stock, is traded on the Nasdaq Stock Market LLC under the ticker symbol HTBK. Now, this merger means that HTBK shares will likely be converted into CVB Financial Corp's shares or bought out. This is their IRS employer identification number, just a standard identifier for tax purposes. This is the main office of Heritage Commerce Corp. This little checkbox here is important. It means this filing is also being used for communications about the merger that go out to shareholders, which is pretty standard. This is the meat of the filing. It's about a major agreement that has been signed. This is the big kahuna, the agreement and plan of reorganization and merger. Signed on the 17th of December 2025, this document details how Heritage Commerce Corp will merge into CVB Financial Corp. It's a big deal, approved by both companies' boards of directors. Here is what's really interesting for shareholders. When this merger happens, every share of Heritage Commerce Corp's common stock will be converted into 0.65 shares of CVB Financial Corp's common stock. So, if you owned 100 shares of Heritage, you'd end up with 65 shares of CVB Financial. This is called the exchange ratio, and it is a key piece of information for anyone invested in Heritage. For employees who have stock options, these will be handled. They'll basically be cashed out. The cash out price is calculated based on CVB Financial stock price around the time the deal closes. If the options exercise price is less than this calculated value, the employee gets the difference in cash. It is designed to give them some benefit from the merger, without them having to hold shares of the new company directly if they don't want to. Restricted stock and stock units, which are forms of stock-based compensation, are also going to be treated. Most of them will just convert into the merger consideration, meaning they'll also be exchanged for CVB Financial stock based on that 0.65 exchange ratio. Some awards might even vest immediately, meaning employees will get them fully rather than waiting for a specific date. This is often done to reward employees and ensure they stay with the company through the transition. They are also addressing any stock awards granted after the initial agreement was signed. These will be converted into similar awards but denominated in CVB Financial stock. The number of shares will be adjusted based on the exchange ratio, and they will generally keep their original vesting schedules. This ensures that employees who receive new awards after the deal is announced still have their compensation tied to the combined company's future. Like any big deal, there are a lot of promises and assurances made between the two companies. They've agreed to certain things about how they'll run their businesses until the merger is complete, how they'll get necessary approvals, and importantly, they've agreed to recommend the deal to their shareholders. There are also non-solicitation clauses, meaning they can't go looking for a better deal elsewhere. In a move to ensure smooth leadership integration, CVB Financial Corp is agreeing to appoint 2 directors from Heritage's board to its own board, and also to appoint Clay Jones as president of both CVB Financial Corp and Citizens Business Bank. This shows a plan for leadership continuity and bringing in key people from the acquired company. The merger is contingent on getting the green light from regulators, and crucially, those approvals shouldn't come with conditions that are too tough or costly. They also need shareholder approval from both companies. No laws or orders blocking the deal, and for CVB Financial stock to be effectively registered for trading to those who receive it. The deal is also conditional on both sides being happy with the other's financial health and promises, and importantly, Mr. Clay Jones needs to sign an employment agreement. CVB Financial also has specific financial performance targets it wants Heritage to meet, related to things like capital and deposits, before they are legally obligated to close the deal. This is standard practice to protect the acquiring company from any last-minute financial surprises. There is an expiration date for this agreement, the 15th of January 2027. If the merger isn't completed by then, either side can walk away. This outside date creates a sense of urgency to get the deal done. And here is a big number with consequences. There is a breakup fee of $32,450,000. This means if either company breaches the agreement under certain circumstances and the deal falls apart, they might have to pay this hefty sum to the other party. This acts as a sort of penalty and compensation, making sure companies don't casually back out of such a significant agreement. To make sure the shareholder vote goes smoothly, the directors of both Heritage Commerce Corp and CVB Financial Corp have signed voting and support agreements. This means they are publicly committing to vote their own shares in favour of approving this merger. It's a way to show confidence and commitment to the deal from the leadership. This section deals with changes in leadership and compensation. Specifically, it addresses how certain executives will be treated as the merger approaches to avoid them losing out on potential bonuses or stock awards due to the merger itself. This is all about managing the financial impact of the merger on specific executives. Sections 280G and 4,999 of the tax code can impose a penalty on excess parachute payments to executives in such merger scenarios. To avoid or reduce this penalty for executives like Seth Fonte, Susan Just, Thomas A. Say, and Dustin M. Warford, the company is accelerating certain payments and stock vesting. So for these executives, 95% of their target bonus for 2025, which would normally be paid in March 2026, will be paid out by the end of December 2025. This effectively gives them a big chunk of their bonus early. Similarly, some restricted stock awards that were supposed to vest later in 2026 will now vest by the end of 2025. This is all done to make sure they receive these benefits before the merger potentially changes the rules or triggers those tax penalties. There is a condition though. If an executive leaves voluntarily or is fired for cause before the original vesting date, they might have to repay these accelerated amounts. Now we get to the language designed to protect the companies legally. This section is full of forward-looking statements, basically educated guesses and predictions about the future. They're saying things like, "We expect this to happen," or "We anticipate this outcome." The key here is that these are not guarantees. They're subject to many risks and uncertainties, and the actual results could be quite different. This is standard legal sire, covering themselves in case things don't go exactly as planned. This is a classic risk for any bank, especially one operating in California. They're worried about the real estate market. If property values drop significantly, it can hurt their loan portfolio because the collateral backing those loans becomes worth less. They're flagging that a slowdown or decline in real estate construction, sales, or leasing activities could also have a negative impact. Mergers are expensive. There are fees for lawyers, bankers, accountants, and all sorts of integration costs. They're admitting that these costs might end up being higher than they initially estimated. This directly impacts the profitability of the merger. This is about the practical challenges of actually combining two companies. Will customers stick around? Will employees be happy? Will operations run smoothly? They're anticipating potential problems like customers leaving, higher running costs, and general disruption as they try to merge their businesses. This is a broad but important risk. Companies face ongoing scrutiny from regulators and the possibility of lawsuits. Changes in laws, new regulations, or unfavorable court decisions can all create unexpected costs and negatively impact the business. In today's digital world, this is a huge concern for any financial institution. They're acknowledging the risk of cyber attacks and fraud and the significant costs associated with preventing them and dealing with them if they happen. This includes compliance with new laws meant to combat these threats. This is fundamental to banking. When interest rates go up, banks can earn more on their loans. But if rates go up too much or too fast, it can also increase their borrowing costs and make their existing loans less valuable. They're basically saying they are exposed to interest rate risk, which can impact their profits and the value of their investments. This section is essentially a heads up to investors. They're telling everyone that more detailed documents about the merger will be filed with the SEC. These will include a joint proxy statement and prospectus, which will give shareholders all the information they need to vote on the deal. They're urging investors to read these documents carefully when they become available because they'll have important details about the merger. They are pointing to past filings, specifically the annual reports, for more context. This is a common practice where companies refer to other public documents for background information so investors can get a more complete picture. This is a standard disclosure related to shareholder voting. It identifies who might be considered participants in persuading shareholders to vote for or against the merger. Typically, this includes directors and executive officers of both companies. They're essentially laying out who has a stake in the outcome of the shareholder vote. They're providing references to where you can find information about the leadership of CVB Financial Corp and Heritage Commerce Corp. This includes their annual reports and proxy statements, which detail who the directors and officers are and what their compensation and stock ownership looks like. It is all about transparency for the shareholders. If any directors or officers have bought or sold stock since their last public filing, they have to report it on a Form 4. This section points to those filings, ensuring that any changes in insider stock ownership are publicly disclosed. It's for keeping track of what the people running the company are doing with their own stock. This is where they list all the documents that are part of this filing. This is the main agreement we've been talking about, the detailed merger contract. This is the template for the voting agreement signed by Heritage's directors, and this is the template for the voting agreement signed by CVB Financial's directors. Finally, this is the official sign-off. Seth Fonte, the Executive Vice President and Chief Financial Officer of Heritage Commerce Corp, has signed off on this report, confirming that the information presented is accurate to the best of his knowledge. So, let's break down what this all means. Heritage Commerce Corp is merging with CVB Financial Corp. This is not just a small deal, it is a strategic move that will create a larger financial institution. For Heritage shareholders, the immediate impact is that their shares will be converted into shares of the new combined company, based on that 0.65 exchange ratio. This merger is aimed at creating a stronger, more competitive entity. They are anticipating benefits like better market position and potentially cost savings through combined operations. However, it is not all smooth sailing. The company has laid out a number of risks, from potential increases in transaction costs to the very real possibility of market disruptions, especially in the California real estate sector. They also flagged interest rate risks, which is a constant concern for banks. From a leadership perspective, they're proactively managing the transition for key executives, ensuring compensation and awards are handled fairly to maintain morale and prevent tax penalties. This signals a commitment to a well-managed process. Even with the complexities involved, overall, this merger appears to be a calculated step to enhance scale and competitiveness. The key to its success will be how effectively they integrate operations, retain customers, and navigate the economic landscape, particularly the volatile real estate market. The $32.45 million termination fee is a significant number, showing the seriousness of the commitment. What is my take? This merger looks like a solid move for both companies to get bigger and stronger in a competitive banking environment. The risks are present, as they always are with mergers, but the leadership seems to be addressing them head on. The real test will be in the execution and how well they can combine their strengths while managing the potential downsides. Alright, that is our breakdown of Heritage Commerce Corp's latest filing. What is your take on this merger and what it signals for the future of these companies? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching. See you next time.